Matt Hurst here with the Matt Hurst Team at Century 21 in Clarksville, Arkansas. And today I wanted to talk to you about the Rural Development Program. It's a very popular loan, and what that is a USDA home loan that's known as the Rural Development Guaranteed Housing Loan Program, which is offered through two rural areas in the area through the United States Department of Agriculture. So for example, Johnson County would be a rural community that this loan would cover, as well as all the surrounding counties are covered here also. Now what this is a first-time home buyers loan program, which means you don't need any money down to get into this program or into the house that you're buying. So it is zero down, it is a fixed rate, so it's not any funny loan that has any bells or whistles attached to it or strings attached to it. The question is, how do you qualify? So the first thing you need to do is get pre-approved through a local lender and see what your credit score is. There are minimum credit score requirements for the Rural Development Program. So I recommend you don't prejudge your credit, you get with the lender, and know this, all lenders are not created equal. The typical rule of thumb is a 640 credit score for the Rural Development Program, but there are exceptions to that rule. We can go down to around a 610. Now also, if your score is lower, don't hesitate to get with us. We can do an analyze projector on your score to determine how quickly we can get it up. And many times we can get credit scores up by 30, 40, and even 50 points. So you do have that minimum number to get into this program. Now there's income limits. So you think you have to make low income to qualify. That's not the case. You can still make a lot of money and still qualify for the zero down program. The limits are around $80,000+ up to a family of 4, and it goes on up from there to around $109,000 for larger families. So basically, the more dependents you have, the more you can make and still qualify for this program. So don't write those numbers down. You want to call us on that, because you can deduct things out like the cost of child care. So if you make too much, you could deduct that out to still qualify. And if you have additional dependents, we can add additional income per dependent as well. So there's just really a lot to it, and we want to go over every detail with the program with you so you know that you qualify or not, and not prejudge the situation. So keep in mind, just to recap, it needs to be a rural area like Johnson County and surrounding counties, income limits, it is credit driven, and the home has to qualify as well. So the home has to be in good working order. You would probably want that anyways. So the program is not designed for fixer-upper properties. And last thing, you have to be a first-time home buyer to qualify. This is also known as the first-time home buyer loan. But I want you to know that if you own a current home and you sell it, you re-qualify for this program every time. So the definition in this case of a first-time home buyer is simply someone that does not currently own a property. So if you have any questions about this program, please give me a call and I can go over all the information about it. And if we're not sure, we'll get a hold of a lender and get you in touch with them also. Thank you very much and have a great day.